With a spousal RRIF, there is income attribution similar to with a spousal RRSP. However, with a spousal RRIF with income attribution, there is no attribution on the minimum withdrawals. So if you only withdraw the minimum, there's no attribution. Any portions above the minimum, there is attribution. There's also no attribution if you are separated. There's also no attribution if you are separated. But above the minimum withdrawal, there is attribution on withdrawals up to any amounts contributed to any plan this year plus 2 previous calendar years. So it doesn't matter if you have a plan at TD and you haven't touched that plan for 10 years and you're now making a withdrawal from a plan at Bank of Montreal. Sorry, you made a contribution last year to a plan at Bank of Montreal and you're withdrawing from the TD plan. As far as the government is concerned, it's all one big RRIF. So it's 2021 right now. If I did a withdrawal from a spousal RRIF and withdrew more than the minimum, any amount that was contributed to any spousal RRIF this year or 2020 or 2019 would be attributable. So let's take a look at a question. So this question is from the retirement planning course through CIFP. If you have the printed book, it's on page 316. So we've got Ben and Jerry, get it? Ben and Jerry. And they are making contributions to a spousal RSP. So Ben's making the contributions to Jerry's spousal RSP. So Ben is the contributor, Jerry is the spousal annuitant. So you see 2 years ago, he converted it to a RRIF and withdrew $5,000. Last year, Jerry withdrew the minimum. So 2 years ago when he converted it, the year of conversion, there is no minimum. Last year, Jerry withdrew the minimum amount, and this year they separated and Jerry withdrew another amount that has a minimum and an excess. So how much of that is going to be taxable to which person? So let's take a look. So it says 2 years ago, he withdrew $5,000. So we would look at this and say 3 years ago, and we would look at 4 years ago, because we would always look at the year of withdrawal plus the previous 2 calendar years. So there were contributions of, 4 years ago, there was a contribution of $6,350, and 4 years ago, and 3 years ago, there was a contribution of $4,200. So the entire $5,000 is going to be attributed back to Ben. Ben is going to pay the tax on it. Remember, 2 years ago, he did the conversion. 2 years ago, he did the conversion. There is no minimum in the year of conversion. So Ben pays the tax on the entire amount. So last year, it says, so 1 year ago, there was also withdrawal of $5,400, which is the minimum. The minimum is never attributed. So Jerry is going to pay the tax on that amount. Then it says this year, he withdraws $10,000, but they are separated. So because they're separated, there's no income attribution. So Jerry is going to pay the tax on the withdrawals this year.